Hello everyone, welcome back to my YouTube channel. And if you are new here, I am Himanshu Sharma, working in SBI and having 4 years of experience in TCS. Today I am going to share some easy tips by which you can lower your tax burden by making smart investment, and even if you have a package of 10 lakhs rupees, you can pay zero tax by following the simple methods which I shall be discussing further in this video. But before moving forward, I would request you to please subscribe my channel if you really like my content. Well, in this video, we shall be covering the topics like how right investment knowledge can lower your tax burden. Then I will provide you the glimpse on how investment at early age can change your life. After that, I will tell you what are all the easy investment options and which tax regimes allow you to avail investment related tax benefits. Then finally, I will tell you the practical example of my older salary and how I did not pay a single rupees tax despite having the income of 9 lakhs rupees. So stay tuned till the end. We will understand how investment provides a big respite from tax burden with an example of a person who is having the income of 8 lakhs rupees. For your reference, I am providing the screenshot from my previous video, whose link I will provide in video description. In that video, you will easily have the answer to the highlighted points. Well, coming back to our 8 lakh salary example, here you see standard deduction is common for both tax regime. But a huge difference comes when we don't opt for investment and chooses old tax regime. You can see that for the income 2.5 lakhs to 5 lakhs, there is 5% tax rate. So that means 12,500 rupees tax will be there. Apart from this, for the range 5 lakhs to 10 lakhs, there is 20% of tax rate. So that means if the person is having the net taxable income is 7.5 lakhs, then 20% for those 2.5 lakhs will be 50,000 guys. So if you add those 12,500 and 50,000, it will come as 62,500. Over and above, there is 4% of cess will be added. So in total, 65,000 tax will be there for old tax regime guy who is having the income of 8 lakhs rupees. Now for new tax regime, for the income range 3 to 6 lakhs, there is a tax rate of 5%. And for the income 6 to 9 lakhs, there is 10% of tax rate. If we do the similar calculation that we did for old tax regime, then there will be tax of around 31,200 rupees along with 4% cess. Clearly, new tax regime is better, but core objective of this video is to not understand which tax regime is better. Instead, we need to understand how you can avoid the tax with right investment choice up to certain income. Well, I'm going to create a separate video regarding the importance of investment at early age, where I will discuss in detail about power of compounding, how the longer time horizon plays a vital role, and also on why building the financial discipline is critical right from your early age with some interesting examples. So stay tuned to get notified about that video in future. Before moving to the demonstration of 9 lakhs income, I will explain few of the core concepts in next couple of minutes which will help you to understand that example well. There are three core terms: taxable income, exemption, deductions. Taxable income is our initial salary without availing exemption or deductions. Then you will ask, what is the exemption? An exemption refers to the certain types of income that are not subject to taxation. Means your income contains few of the components which we can utilize to decrease your taxable income. It includes the components such as HRA, house rent allowance, LTA or leave travel allowance or leave travel concession, food card allowance, communication allowance, etc. Means to avoid them, you will have to produce bills to your employer, and accordingly your taxable income will be reduced. Also note guys, HRA and LTC LTA partially exempted. I will explain them later in some other video. Now moving to the deductions part, it includes the list like NPS, PPF, health insurance premiums, all loan deductions, etc. All of these deductions I have already discussed in the earlier video. You can revisit them if you want. So suppose if you want to avail tax deduction, then you can do any of these investments and accordingly your taxable income will be reduced. With all this knowledge, let's jump to the demonstration. Here in this example, I have taken the gross salary as 8.5 lakhs approximately after combining basic pay and other allowance in salary. I will utilize just the HRA exemption, section 80C, 80D, 80CCD2, 80CCD1B for demo purpose and explain each section as we proceed. Now guys, whatever exemption and deductions I will discuss further, only standard deduction of 50,000 rupees and section 80CCD2 only applicable to new tax regime. No other exemption or deduction shall be applicable for new tax regime. Now, first exemption under the old tax regime is availed through HRA. Here, if someone has income of approximately 9 lakhs, then they can easily utilize this section and claim 1 lakhs of exception easily. Only condition is that you are living in a rented home. Also guys, you can check the HRA rule in this image. I will discuss all of this separately in some other video with an example. Further, you can utilize section 80C. It offers various investment options like EPF, NPS, contribution from employee side, fixed deposit, public provident fund, mutual fund, etc. You can easily claim 1.5 lakhs of deduction through this section. Now next deduction that you can claim is on preventive health checkups and paying medical premiums. You can enroll your dependents here and avail the maximum deduction under the section 80D. For this example, I have taken almost 1800 rupees for an annum. Now comes the voluntary contribution in NPS from the individual side. It comes under the section 80CCD1B and allows a benefit up to 50,000 only if you have exhausted 1.5 lakhs of limit in section 80C. Finally, we will avail section 80CCD2 section of income tax. Here we can claim deduction if our employer is investing in our NPS account. Only point to note here is that 14% deduction can only be availed if you are state or central government employee. For rest of the employees belonging to PSU or private sector, maximum amount that is exempted up to 10% of basic pay each month, irrespective of employer investment under the section 80CCD2. Now if you calculate all the deductions for both old and new tax regime and compare with the tax rate, you will see that old tax regime clearly wins. And we will be having zero tax this time. Also the best part is we have invested that valuable amount for our future use. Also do note that the tax liability in new tax regime for the same income, it's close to 33,000 after availing standard deduction of 50,000 and 27,000 deduction from section 80CCD2 because that's the only two deduction we can claim. But it's not the always that new tax regime gives the maximum tax liability. It depends on your investment preferences and your taxable income. Suppose someone has 10 lakhs of income, then if they invest up to 2.5 lakhs, then to old tax regime will have more tax liability in comparison to new tax regime. So always study thoroughly before choosing which tax regime suits you. Well, that's all for this video. In case of any doubt, please let me know in the comment section or drop a message on my Telegram or Instagram profile. Thank you.